Hello, everyone. Welcome back. This is Wade into Wealth, one that's slightly different this week. You'll find us here on the podcast, not on YouTube this week because one of us left the camera charger somewhere on the West Coast, and therefore the new one won't be here yet. So we're audio only this week, and we do appreciate your patience and willingness to forgive my technical difficulties, so to speak. Before we get to the podcast, it is upcoming Brighton Securities Annual Shred Day. And I thought it would be good to put that out there because this is something that...
You don't have to be a client.
Nope. People like it, though.
Oh, people love it.
Shred Day.
And there's free ice cream.
It's usually the Luigia's truck. That's one of the top ice creams in the area. So if you have old documents, if you have old bank statements, checkbooks, credit card statements... We've seen it all. The big shred truck will be in the parking lot from 1 to 4 p.m. on May 20th.
With free ice cream.
And
you get to watch your documents get shredded.
Yep.
What is more exciting than that?
Well, what's exciting is the space it can often free up for folks.
That's right.
So I would encourage anybody in the area, take advantage of it. No appointment needed. Just stop down. It's between 1 and 4 p.m. on May 20th.
Come on down.
Hope to see you there. Tell them Wade into Wealth sent you. On a separate topic this week, Netflix and streaming services. Netflix struggling a little bit. They reported their first quarter numbers.
I think, most streaming companies are struggling a little bit right now.
But that's the big one. Netflix is the originator of streaming services. That's probably the first one we all had and still have. And they announced that in the first quarter of 2022, they lost 200,000 subscribers, which, okay, it's not the end of the world. But then they said they're expecting to lose another 2 million through the first half of the year. Stock price dropped 35%. And this is becoming an issue now. I think we're seeing the landscape start to change for streaming services a little bit.
Yes. Well, there's more competition, for one.
Do you know how many?
No.
Streaming services there are?
No, but I know how many I don't even know how many I subscribe to, but it's got to be 7, 8, 10.
Streaming services?
Yeah.
There's over 200.
No, I meant that I specifically subscribe to.
I understand. Yeah, okay. So there's over 200 if you include the live TV platforms, Roku, Hulu, along with Apple TV, Showtime, Disney Plus, HBO, Prime Video, all these different services.
But we're also making our way out of the pandemic.
Yep.
And these places also make it very easy to cancel your service.
Mm-hmm. Which is a good thing.
It is.
Which is a good thing.
But it's also going to lead to churn, which is an important statistic that streaming... And churn means maybe there's one series or season of a show on this particular streaming platform that you like. You sign up for it to watch it, pay for it. Maybe it takes you a month or two, and when you're done with that, you cancel it.
Right.
And so that's churn is something that I think we're seeing more of, where Netflix they've got some good stuff, but their content perhaps has been lagging a little bit recently, and the fact that you're going to lose some subscribers as a result of that, it's going to happen.
Well, you're starting to see a few things. One, I mean, you hinted at it. We've all got, most of us have multiple streaming services. And when you started and Netflix was, $7.99 a month or $11 a month.
It might have even been $6.99 a month. Somewhere around there.
Whatever the cost is. So you do this and think, okay, well.
Without ads.
Without ads. Right. And then you think, well, all right, well, let me sign up for Disney Plus. Okay, well, that's another... I don't know what it is a month. Let's say $10 a month. And you do this 5 or 6 times, and now you're
paying more than you were for cable.
You're at $60, $70, and you're paying more than you were for cable, which was the whole point of this originally. We've started to get there, and I think people are starting to realize you can only watch one at one time.
That's right.
And I've got 5 or 6 of these. How many do I need? Well, that's an easy way to save a couple of bucks a month.
Yep.
And so that's one of the things. The other thing we're seeing is that cost. A lot of these, Netflix produces a lot of original shows. There is a cost to that. More so than just buying a content library.
Well, there's a cost to that, but there's also a cost to buying content library.
There sure is.
You have to pay for that.
The other thing that's happening, you mentioned dwindling market share. You used to be able to watch The Office, Mad Men, Breaking Bad. That was all on Netflix. And now you've got, NBC has Peacock. So The Office is gone, which was for a long time the largest viewed program on Netflix.
Yep.
You've got Mad Men is now over to AMC's streaming service. So a lot of these shows and things that were very popular have migrated to their own platforms as various networks and production companies have taken their programming back. So
I'll tell you what, though, Amazon wants to close that dent. Stop people from sharing passwords.
well, that is happening with Netflix.
They're going to do that. Yeah.
Netflix has
I'm sorry, did I say Amazon?
You said Amazon, but I think
meant
they all
Netflix,
want to. But Netflix has they came right out and said, if you are sharing a password, they are going to start to crack down on that. They weren't in the past. They were just letting people do it because it allowed them to say they had more users.
I saw some statistic that if they just converted 25% of the people who share a password, it's meaningful in terms of the revenue that they would bring in as a result of that.
And, we're seeing this too. This happened recently. So CNN had announced their streaming service, CNN Plus. They announced it.
Did it even make a month?
No.
Not even a
No,
month.
it started in April.
Yeah.
And then what was also happening, though, is you had Warner Brothers and Discovery. There was a merger happening, and the new company's ownership was not able to do anything about CNN Plus until they took over ownership. And so new owner Warner Brothers Discovery decides they're going to shut it down. So CNN Plus shutting down on April is gone now. It shut down on April 30th, so it had been in programming for like 3 weeks. And that's happening too. I think people are just seeing there's not necessarily the profitability that these companies need.
Well, yeah, and you said it. You can only watch one show at a time.
Right.
And there's so many out there now.
Well, and that's it. And we're getting
Such
to
a
point,
saturated
too,
market
where I can look at my phone and say, well, is there anything on Amazon? All right, well, is there anything on Netflix? Is there anything on HBO that I want to watch? Is there anything on... You have all these streaming services, and you start to think, why do I have so many of these? All of a sudden, and places are starting to cut the cord. So, it's interesting how that landscape has changed, and you see that. And I think this is a good lesson. Netflix stock was part of the FANG for a long time, which was Facebook, Amazon, Apple, Netflix, and Google, responsible for a very large part of the growth that happened during the pandemic in the stock market. And now we've seen that start to change. The pandemic has waned, and...
Well, we're not a hostage in our own home.
No.
And forced to watch, and the weather's also getting nicer.
Right.
Now, that's only, other parts
That
of the
helps.
country don't have to deal with that. But it's all of these factors adding up makes it real easy for people to cancel their subscriptions.
And I think yes, you're right. What we're seeing, and this is not just native to Netflix, but to a lot of companies, is that the pandemic allowed companies to hide issues that they had or put them off because of the fact that everything changed. These were not new issues for Netflix. The fact that they had a programming budget of $20 billion, which is a significant cost, but all of a sudden we're all home and we all stopped. So it looks good, and it allowed, I think, a lot of companies to avoid issues they had, but now those issues are coming to light and it's becoming a problem. So as they say, the elevator never goes all the way to the top.
Yeah, there you go. They say no tree grows to the sky. I mean, we can do this all day long, though, with our anecdotes.
Yeah. But if we stay here and do this all day long, we would be taking up some of your value.
And let's face it, we're going to start losing subscribers if we do that, too.
Right. We don't want to. Hey, here's the thing. Subscription's free. There's not any ads.
That's right.
It's just you and I waxing on various topics financial. So we'll be back next week with more content. We'll be back on video when the battery charger arrives, and we'll be good to go. Any final thoughts? What's your favorite streaming service? I'm curious. Do you have a favorite?
No, I don't have a favorite. I think there's particular shows on each one that I like. But Brenna and I are particular to the One Chicago series, which is NBC, which Dick Wolf, the guy who created all of the Law and Orders, is a genius because he has this now One Chicago series, which is Chicago Fire, Chicago PD, and Chicago Med. Even crosses over with some Law and Order. The guy's so that's on Peacock. But more importantly, what do we think we're going to start to see from these services I think we're going to start to see way more ads.
Absolutely.
Well, the option of lower monthly price with
Right.
ads or pay a premium for ad-free TV.
Amazon does it now. There's content you can watch on Amazon that's free with ads, and it's not the end of the world.
No, that
It's
doesn't
5 or
bother me
6
too
ads
much.
throughout the course of a movie. It's not the end of the world. I think the other thing that you're seeing a lot of is competition and bidding for live sports.
Yep.
You're seeing that migrate over to streaming services because that's one thing that is going to be in demand.
So if I can go on a brief
tangent
here.
We're not done.
No, we're not. We all like the Tigers.
Yes. The Detroit Tigers baseball
Tigers.
team. Yes.
I get the subscription to the Tigers games because they're out of market. So they're being in Detroit. We don't get the Tigers games. When they play the Yankees, don't get their games because we're considered in-network for the Yankees.
Right.
Except there's only one streaming platform that has the Yankees TV network, which is DirecTV Now.
Oh, okay.
I feel bad for anyone who is a Yankees fan because that's the only option you can see games.
Really?
Yeah.
Huh.
You can't subscribe to Yes specifically. You can't, Amazon now has some Yankee games on there, not the Tigers games when they're playing them, but I had to jump through hoops to figure out where can I get a free 3-game subscription to be able to watch the Tigers Yankees. Had to sign up for DirecTV Now and canceled before the free time was up.
You sign up, you put the note in your calendar, cancel subscription on the day. Yeah.
After the third game of the series, DirecTV Now was canceled.
Yeah, live sports is kind of the outlier here.
It's a huge outlier for it.
Because that's the one thing that is very much in demand, but there's a high cost to that.
Yeah.
Again, that these companies...
And that's what I don't understand, and I think you probably understand this far more than I do, being considered in-network for a program and the fight over those broadcasting rights.
It's just such an archaic system. I mean, whether you're in network or out of network you're talking about like if a game is in your area, it's being blacked out.
Correct.
It's such an archaic system. I mean, the NFL I think has done away with that or is working to do away with it. Major League Baseball, really, it's just stupid that they do that. But the fact of the matter is that live sports, predominantly the NFL. That's the big one.
Oh, yeah.
The NFL is the big one, and Amazon has really made inroads into that. That's content you can then bundle or say if you want to upgrade to this NFL package, and that's where they can make a lot of extra money. But you're right. You're likely to see ads coming in a lot of these services because they have to find new ways to generate revenue, and one of those ways will likely be a teaser subscription that's less, and there's ads in the programming, which is commercials. And we're back to watching TV with commercials again.
Yeah, and from an investment standpoint, it's a fantastic snapshot of technological advancements. When they are new, it's tremendous amount of growth until other people do it, other businesses do it, and then all of a sudden you see price competition, meaning you've got to reduce your prices or find other ways to generate revenue. I mean, you saw these streaming services. Now, I mean, do you consider Amazon a streaming service? I mean, they have one.
They do.
It's not the bread and butter part of their business, but it's a real competitor in that space where you saw a tremendous amount of growth. And now that you see a maturation of that industry, you're going to see slower growth. Doesn't mean that the growth is gone, but you're not going to see the type of growth that you saw 10 years ago now that we have more competition involved.
Well, they're maturing, and you see this with companies that were big
all the time
30 years ago that were the darlings of the stock market. This is what happens. It's a great example of how cyclical things are.
Yep.
We're kind of back to where it was when we were kids. It's a different medium, but you had to, you're going to have to watch commercials or there's a cost to have these services. So, yeah, it's fascinating. But it's a good lesson, too, that when you're owning companies, and we've seen that very recently this year, a lot of technology companies that have just been home run hitters in terms of their share prices have struggled as of late. And that's because there are new issues that they face that may have been hidden by the pandemic that are coming to light, and they have to deal with it.
And it's a good reminder that the stock market doesn't go straight up.
No.
There are bumps along the way.
That's why you diversify your investments.
That's right.
All right, so let's end it for real this
Yep.
time. We had the
We got
false
it.
ending there earlier,
got
but we got going. So we're back next week. Thanks as always for being with us. We're so glad that you are on this journey to financial wellness. See you next week.